We're about to start. If anyone can tell me that they can hear me and see the screen, please type in yes. So if you have your chat box, I've just typed in there. Can anyone see this and hear me? If you can reply, maybe if I send it. Okay, good morning. It's 9:30. This is Andrew Peters from DIY Forex Skills with the webinar sponsored by Donna Forex, and it's all about developing profitable Forex strategies. Just getting myself organized so that I can see commentary. And okay, so these webinars are about Forex trading, and since that's a financial instrument, we do need to have our risk disclaimer, our disclaimer and risk warning, something that you see in all these sorts of programs, but it is important that we recognize that Forex trading is risky. I'm still having an awful lot of beeps. I'm hoping that's going to stop soon.
The broadcast is now starting. All attendees are in listen-only mode.
Okay, hello and welcome. If I get back to my slide. I'm sorry, I was talking to myself because I forgot to share the screen with my audience. So hopefully that's all okay now, and let's start again. I'm Andrew Peters from DIY Forex Skills, and this is a webinar on developing profitable Forex strategies. It's a webinar series sponsored by Donna Forex, with whom we all be pretty familiar. And yes, I do have my recording button on this time, which I forgot to do last week, and for my sins I had to re-record. But this time we should be right. Just before we start, our disclaimer and risk warning that we need to have, since this is a financial instrument, excuse me, and Forex trading can be risky, and we need to take full responsibility for what we do. I like to remind people about the things that can happen, and back in January when the Swiss Central Bank decided to stop pegging the Swissy, we had a huge drop of some 3,000 pips, and a lot of people lost money, and a number of brokers actually went broke. There are other events that can cause things like this, and the other things that we need to keep in mind is that that we should always trade with responsible brokers, brokers that are reasonably well known, that are governed by the laws of a country under regulatory principles, because there are instances where brokers, even though the money is supposedly in your money and our money is in a segregated account, there have been cases where some nighttime operators just walk away with the money. So in trading, if you're trading with small amounts, trading with one broker is fine. But if you are trading with lots of money, owning over 5,000, it's an idea to spread that money across several brokers just to be on the safe side, because you don't want to end up waking up one morning and finding all your money gone for one reason or another. So trade responsibly and be happy. Okay, the concept, and apologies for those who are watching this third webinar, but very briefly, if you're new, what we do in this webinar series is we take a trading strategy and we try to understand the logic of that strategy. Now, that is nothing new. There are many courses which will do that. There are many books you can read where these sorts of things will be explained. The big difference that we have with this webinar series is that once we've done that, we then enter those settings on what I call an Autotrader. That's the product that I've developed. And then we can actually test how well this strategy has worked in the past. And we can also fine-tune that strategy to make it more profitable. So it's one thing to read all about how to trade, and there are good books that we should be reading. But the trouble is that once you've done that, you have to test it for quite a few months trading forward in order to see whether it actually does work under current market conditions. With the Autotrader, at least we can backtrack over many years of market conditions and see how robust that strategy is and how well we can fine-tune it. And so that's the big differentiation of what we do in this webinar series compared to others where you'll just learn about the basics of a trading strategy. Once we have finished the analyzing and optimizing, when we'll come up with a series of settings, and you're then welcome to take those strategies forward and trade them manually. But if you have the Autotrader, like I know some of you do, then we can set these. You can, rather than having to trade manually and be at your computer for lengths of times, you can set that up in the Autotrader and be trading on autopilot. I just want to mute while I sorry, I had to take a glass of water. So that's the basics, the concept of it. And where we got to last week, we started looking at a series of ways of trading. And the first one we did was to trade on the trend confirmation, which I won't show at this stage. The second one is where now let me do that just to clarify things. So a trend confirmation, and we took a moving average crossover. This is a 50 simple moving average. That's a 200 moving average. And this is what we call the MACD. And when the red had crossed the blue and the histogram in this bottom part of the chart, the MACD was above the zero line, we would have entered a trade, a buy trade, and we would have, in this case, taken some profits. I also showed last week that we can add additional trades as we go, and we can do that on the Autotrader automatically, or you could do it manually if you are sitting at the screen. We then went into a pullback situation. Let me just, so I can see what I'm doing, where instead of entering the trade at this position here, I'm at the cross of the red and the blue. We wanted to wait for the trade to pull back somewhat, and that is signified by RSI and RSI of period 3. And when that RSI drops below the level of 20, RSI goes from 0 to 100. So this is the 20 level, that's the 80 level. When that drops, but MACD is still above 0, as we see here, and the red is still above the blue, then we could enter a trade on a pullback. So we've gone up a bit, we've pulled back, and we've now given a signal that it's safe to enter another trade. So you could enter a trade here, enter another trade there. We have a second pullback occurring here. MACD is still positive. Red is still above the blue, so we could enter another pullback trade here. So those are two that we have done over the past 2 weeks. And then the third one that we did is labeled here in the blue. It was a trend line break. And let me again show you that one. And it disappeared on me for a while. And the trend line break is normally when you're trading, you look at how price, in this case, moves down. You can draw a trend line either here or there, it doesn't matter, but the general thrust of price is going down. But if we look at RSI, it's RSI 20, you see that from this point here, and RSI is a momentum indicator. So although price was still going down, momentum was starting to drift up, and which was a good indication. And at this point here, now that's a secondary indication which I'll actually come to. But so the main line is that we have a trend line joining following the price down, and when that price breaks that trend line, which is this point here, we would enter a buy. And we did that with the Autotrader by using, since we can't draw straight lines, we used a smooth moving average and a simple moving average of 2. And when that broke and RSI was in the green zone for a buy or the red zone for a sell, we entered the trade. And so we would have bought here. And then as you see, as we go further along, there's another nice trend line which is broken. And we replicated that again with the 10 smooth SMA, which is the blue line. When we smooth a moving average, we, as the word says, we smooth it, we sort of don't get all these bumps. And again, when that broke, and I've got to get my little thing off to the side, and RSI was in the red zone, we did a sell. And so that works quite nicely, and it's what we call a trend reversal. So the trend is moving, in this case, down, and when it reverses, when it breaks that trend line, then we enter a buy. So that's a simple manual trading strategy, and by using the moving averages and RSI, we were able to mimic that in the Autotrader, and that meant that we could essentially trade this sort of strategy on autopilot. And what I want to do today, and we may not get through it all, I also talked about the pullback, but I didn't specify how we did that on autopilot, and because I got myself a little bit confused. So if I just take you back, we'll look at the pullback, and then we'll just show you how we can automate that particular strategy. So I'll go back to my chart and go back to here. Now, let's concentrate on this particular point here. So in order to get these conditions into our Autotrader, we would have to say that at this position here, the SMA 50, which is our fast moving average, hence it's colored red, is above this simple moving average 200, the slow moving average. and MACD is above the zero line. The MACD histogram is above the zero line. These things are both coded as a buy. So if I were to put these settings into the Autotrader, then that would signal a buy trade at this point. And I then can specify RSI that it should only buy when the RSI value is somewhere between zero line and 20. And that makes it simple enough. What I have a problem with in some cases is this particular buy trade on the right here. And as you can see at this position, we still have the red above the blue. We have the MACD histogram above zero line, and we have RSI below 20. So I can program all of that. But in the version I was dealing with last week, I've always specified that when the red is above the blue in this case, it must also be pointing in the direction of the trade, because if you enter a trade at this point here, for instance, we would say that the 50 moving average is still above the 200 moving average, but it's starting to point down, and that's a bad indication that the trade might be folding over. And so coded into the Autotrader is the condition that if we can only enter a buy trade if the fast moving average is sloping up, like it is here and like it is at this point here. But at this point here, the moving average is actually sloping down. And so what we had to do was to get the coder to put a second bit of program into there so that we could set that particular condition to false. So let's see what we've done. And to do that, I need to go to Strategy Tester, which is for people who are not familiar with MT4 platforms. I'm towards the top left-hand corner. That little thing with the looks like a magnifying glass, and that brings us up with the Strategy Tester. Just going to move something across. I'm going to hide this, and I'll check back on any questions from time to time. So we need to go to the Expert Advisor, which is the Expert Properties, and we come up with what I call the menu box, and these are all the conditions. You don't need to understand it at this stage, but these are all the settings that I can change. I need to load, and this is down here in the DF webinars, the version 31, which is the model that I'm currently running with the pullback with the RSI. So we double click on that. And at the top here, if I go down to my moving averages, it's labeled 5 here. And so what we can see, we're doing the time frame that the chart I'm on is a Euro USD, and it's on the 1 hour time frame, which is 60 minutes. It's a 50 period moving average and a 200 period moving average for the second one. We want to enter on that basis, so I've set that to true. And this is where the new modification to the Autotrader is. So the slope for the filter entry, we normally have that on true, but in this case we want to allow for it to also be false, because we've seen from the charts that there are enough conditions. Now the point is with the Autotrader, of course, I can run it once with false and run it once with true and see which gives me the better results. The other ones that we have done is to go to the RSI settings, and we've set that to true. The period is 3. And in this case, after some optimization, I found that a 15 and an 85 rather than a 20 and an 80 were better as settings for RSI. So we've done that. And the last one is the MACD. Set that to true. And these were the settings for that MACD, the 12, 20, and 9. And if you were to look through it, everything else is set to false, so we just don't need to worry about that. I just need to worry about what I've got up here. Another one that people should be aware of if they've got the Autotrader. Normally we sell in a sequence of a buy, sell, because normally prices go up and down, and moving average lines cross down for a buy and then cross down for a sell and then cross up for a buy. And so we have that to true. But as you can see in the charts, there are several instances where we have a buy. Well, if we're trading the pullback, there's a buy here followed by another buy. And so in that case, we want that sequence to be in the false mode. But believe me that normally having it in the true mode gives one better results. I've allowed hedging, which we don't really need. And so we set that to false. And I just need to do something else here. And if I set my magic password, and that should totally confuse the system. And let's now see if so we've got that, we'll click OK. Now what I'm doing, I've got my Expert Advisor, version 31. I'm trading the Euro US dollar. Currently I'm doing every tick. I'm doing it on the 1 hour chart. I have a spread, and I'm testing it from the 1st of January to the 19th of July, and we can start. You probably wouldn't have seen, but in that particular settings on the Autotrader, I also only trading it for several parts of the day, because in backtesting I found that if I traded it for 24 hours every day, then the strategy wasn't very profitable. Whereas as you can see from here to date, we've only got 4 trades, so it doesn't trade all that much, but at least we are making profit. You can look, while this is going on, we can look at the results. We can see we've made 108 on a trade, 25, 20, lots of 25s. This is when it's the break even. We're still going, and we're getting close to the end. And if you heard that, that's the signal. And so if I then click report, we've only made $416 on 10,000. Only had 13 trades, but we've only had 1.8% drawdown in that period. Now, that's not sufficient profit but the point is having such a small drawdown of only 1%. There's of course nothing to stop us from taking larger trades, and I could make that to 5%, and that would roughly then more than double the profits that we made. And part of that then depends on something that I haven't fully optimized, and those are our settings here. So we can vary. So it might well be that we should have aimed for about 150 pips profit, and it may be that instead of breaking even at 10 pips, we should wait, give it a chance to at least get to 30 pips before we do a break even. So we can make all those sorts of changes. And then the other thing that I wanted to show you in the Autotrader, and this is part of the testing process. At the moment, this one is only trading between the hours of 1400 and 2100. This is GMT plus 2 times. So it's 12 o'clock till 1900 GMT time, and also early in the morning from 0, the first 5 hours of the trading day. So those 2 periods in the day were found to be the most profitable when I did my back test. And I also discovered that on Thursday, for some reason, maybe related to news announcements, this particular strategy wasn't profitable, and so no trade on Thursday has been set to true. But all of these you can change at your will. But that's part of the optimizing process that we need to go through. And the beauty of it is that even if you wanted to end up trading manually, let's close this down, you can still use the Autotrader to see what time of day and what days of week a particular strategy would be best to trade manually. So think of the Autotrader as a way to test out when you should trade and how you should trade with what settings. And if you want to, if you know you're going to be asleep in a certain period, so if you want to trade the London session but you live in Australia, unless you want to stay up all night, there's no way you're going to trade that session, or certainly not the New York session. And so again, the Autotrader can take that pressure off you by trading for you. Okay, so we can easily set up a pullback. So I've shown you how we can set up on the Autotrader a trend confirmation or a trend continuation strategy. I've shown you now how to set up the Autotrader to do a pullback. I've also shown briefly last week how to do the trend line break. And now we come to somewhat a more difficult one, and this is really still work in progress. But I thought that rather than just showing you everything as a finished product, that I wanted to share with you how we work our way through something to see whether it works. And often, surprisingly, even if it doesn't do what you were hoping it to, sometimes you can find a really nice strategy that that works, even if it doesn't do what you had thought it would. So to do that, let's go back to our chart. And just let me see if I have any questions at this stage. Okay, keep talking, don't go quiet. Yes, ma'am. Right, so we need to get to bearish divergence, or bullish and bearish divergence. And this is a well-known feature of any trading chart. And the notion is, let's get rid of our strategy tester for a while. And the idea is that when price continues to go up, as it does here, and at the same time your RSI, your momentum indicator, starts to go down, as it does in this bit here, forget about this rest line. I can't truncate the line here, but this position here. So price is still going up. We get higher highs, as they say, but we get lower highs on the momentum indicator. Then that is saying that the trade is getting exhausted, and you've got to be ready to enter a sell. And then the point is, of course, at what stage do you know? Normally we would like at least 3 peaks for joining any type of trend line. So this one shows it quite nicely, and this time RSI is also pointing down. And we can look at different parts of the chart where it's doing the same thing, and I see another one here. Maybe this is the simplest one for me to use, but we could say that's only 2, unfortunately. But while that's happening, at the same point in time, RSI is waning. So again, we have a bearish divergence, and certainly it's lovely in hindsight, and certainly the price did plunge after that position. I'll just see if I can find an alternative one. This one here. Just ignore these moving average lines if you wouldn't mind, but just concern yourself about here that the general, I've drawn the line here, but really what we're making is lower lows. So price is going down, but at the same time the momentum from here on in, at this point here, price is still going down, but momentum is starting to fade and go back up. The downward momentum is reversing and we're going back up. So we've got price going down, RSI going up. At some point in time, it's time to hop into a trade, and manually we could do that anywhere from this position here. Just remember that when we're trading in real life, of course, it's like that. And so we see this happening. Let's see if I can get this right. And so you've got to say, when will I, when will I? I can now see price starting to go up and RSI still pointing up. So maybe I could enter there. And then, oops, it went down a bit. And that's where you need a stop loss. And so you're fairly right. And what a lot of people will do is that they'll enter somewhere along this point here and put their stop loss below the previous low. So somewhere a bit lower than that. And then that case, when it does move down to here, stop loss is down here, so you're not going to get stopped out. So that's the theory of it. And the question now is, can we automate something like this? And this is where it is a work in progress. Let me get back to my other one. So as you can see, I've been getting a lot of lines here. Let's get rid of this one. I've been playing around with ways of trying to find it. So the question then is, how do I specify that price is going up and at some point RSI is going down? And at the moment, I've got no, there is a way of doing that, and I think I've got that on to the next chart, if I can find myself. Let's just go here. So that was the 15th of May at 2100. I think it's also good to spend a bit of time, even if you're trading on with expert advisors, is to look at charts from time to time and just see what is actually happening, because it can be instructive and it can give you new ideas. So here we are on that same position at 15th of, wonderful, 15th of May at 2100. And we can see here, this is the price still going up. And this here is RSI heading down. And as I said, I was trying to find a way in which I can tell the order trader at what point RSI has to be. Now, just saying that price has to be at a certain height is one thing, and I'll come to that. What you can do with RSI is to add moving averages to RSI. So what I've done here, I have added a moving average of period 70, and I've made it smooth. And normally, this is added to something like close. That's not going to go. Let me get rid of these. It might be easier. Okay, so that's RSI. It's an RSI 30. If we want to get a moving average of RSI, we go to our navigator panel and we click, left click and drag a moving average to our indicator window. Let go. And the first thing we do now is, instead of applying it to the close of the price, we apply it to the first indicator's data, which is where we are. And I want it 70, I want it smooth, I click OK. And so the moving average now comes here rather than on the main chart. And so we take a second moving average, we bring it down into here, and again we apply it to the first indicator's data, which is our RSI. And from memory I had 10 smoothed, and I made that red for fast, and we click OK. It's not quite where I wanted it. As you can see, what's happened here, RSI breaks at this point here, which is not really what I want. And so let's make that 15. And now RSI breaks about here, which is a bit better. Now, you might say, well, I'm just fitting the facts to the, fitting the indicators to the facts, and that's true. But what I'm trying to see is, I want to see if I can somehow mimic an RSI moving from a fairly high position to a lower position. And I could also specify that this cross, say that RSI must be above a certain level for this cross to occur. So I could set two conditions. I can now set this up in the Autotrader, and as you can see, that works fairly well. So as I said, instead of getting in, if we're just relying on RSI, we would get in at this position here, and there's still a bit of a, for a sell trade, and that still works fairly well. You might have also noticed that in the reverse, we're crossing it upwards here, and we would have entered a buy at this position here, and we would have also done quite nicely here. Are we always that lucky? Probably not, because if I look at this next cross, we would have entered a buy here, and we certainly would have been hit with a stop loss. But of course, our order trader would have sensed that change of direction, and it would have entered a sell trade here and hopefully recovered some of the loss that we made on the buy trade here. If I go forward, I'd enter another buy trade at this position here, which would do quite nicely. So Actually, having studied the chart and then tried to focus my mind on how do I tell my order trader to trade on this sort of trigger position, I know I've actually made a strategy which totally ignores what's happening in price, but seems to look quite promising in terms of just taking the trade based on these moving average crossovers of RSI. Now we can do that fairly simply. Why don't we give it a go? So we go back to our strategy tester and we go to our expert properties, and this all stays the same. Oh, we might want to allow hedging. So let's set hedging to true. Let's not worry about the trade settings. I mean, that's something we optimize afterwards. In this case, for testing purposes, let's set that to false. And we'll trade every day of the week. We're not using the triple moving average. We're not using the moving averages, so we set that to false. We are not, now, in this case, we're not using RSI as such. I'm just going to write totally on the crossover, so we set that to false. We're not using MACD, so we set that to false. And then we come to the last lot, which are my RSI moving average entry settings. The crossover is going to be 0, and we want to go to 2 moving average crossover, which is this one here. If you got your glasses on, it says MA in a singular RSI entry. We don't want that. We want the plural MAs entry, so we set that to true. The RSI period, as shown on the chart, is set at 30. To the close price, we have the fast one is 15. It is smoothed. The slow one is 70, and it is smoothed. And all the rest is false. As I said, this is work in progress, and I am going to change this back to true. So we're going to do a buy, sell sequence, and let's give it a go. And I have no idea because I've actually, now the only thing is I suspect it's going to be extremely slow, and that's one of the disadvantages of using moving average of RSI, because it now has to compute this moving average every tick, and therefore I'm also going to change this to open prices, which would speed it up, but is nowhere near as accurate. We'll see if we get any movement. If not, then I'll know why. Okay. That's working a lot faster than I thought, but obviously we're not profitable at all at this stage. And we've gone down from 10,000 to 6,000. So we've lost well over, and there's probably very little point in continuing that because we'll just trade ourselves into oblivion. So let's put a stop to that. Surprised how fast it is, so let me just go back to tick and start that again. And this is where we see the problem with using moving averages of RSI. When you do it on an accurate manner, it is just so slow that you can really sit here all day, and this could probably take a day for us to run. So we'll stop that as well. And so although this setting looks promising, and certainly one could use it as a, I'd be happy trading it forward on demo for a while to see if it works, because this doesn't affect the normal trading. It only affects the speed of backtesting if you use moving averages of another indicator. And so it's probably not one that we can pursue in this one. Let's see if I can go back to where we were. So this one, for backtesting purposes, I'm not going to be able to use. What we can, though, and try and use is use levels, but let me first of all get rid of these. And so what we could say is that make this a bit bigger. We could specify an RSI level. Normally what happens when you've gone this high in price, RSI is somewhere up near 100 and is going down. So you could specify that we would sell a trade when RSI is between, say, between 60 and 70, or 60 and 80, whatever, but not too much lower. So that could be another condition we could try. But I will also discuss how do we tell the order trader that a price is moving up. And while I couldn't sleep last night thinking about what I would cover in today's webinar, I had an idea that is going to be worth trying, and let me share that with you. We're trading here on a 1 hour chart, and it's very difficult, as you can see in this case, if I were to just add a moving average of, say, 50, and even if I make it smooth, let's make it blue. One option I have is to say, well, what's the distance of price between the moving average line and the price? And you can see in this case, that's about the same distance as it is here. In fact, it's getting less. So that's not really going to work. But if we were to count the number of bars, this is an hourly chart. If I count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, up to here is about 24 bars. And if I count from here, it might be more interesting. So again, up to here is about 24 bars. Now there's 24 hours in a day. And so if I looked at the daily chart, and let me look at the daily chart for 13th or the 14th of May. So I'll go to daily. And let's enlarge that. And let's find 13th of May. It's probably this one. In that period, that's gone to 150 odd pips in a day. And so what I'm starting to think about is using a higher time frame to try to capture this. Now, in this case, that's still not going to work. But you could imagine, and if we could do 3 days, of course, that would be great. We would have a real way of if we can capture somehow when on the daily it has moved quite a bit, then back on the 1 hour chart, we could use our RSI. So that's another way that I want to explore, because at this stage, although I've had a few goes at trying to mimic this, I'm really not doing much better than a trend line break being confirmed by the RSI. So I wanted to leave it at that for today. Let me just take you back to our overview chart. So we've done 4 types of common trades, and we've been able, that's the trend confirmation, and we've been able to automate that quite easily. We've done a pullback in an ongoing trade, trend continuation, and we can automate that. We've done the trend line break, okay, and we can automate that. But this one is a bit hard. What I found and what I haven't shown you is I did get some settings and I actually became quite profitable. But when I went back and checked to see whether that actually mimicked the divergence that I've been showing you, it didn't. It did pick up some nice setups, but they weren't really related to bearish and bullish divergence. Now that doesn't bother me, because if a strategy is profitable, then I'm happy to run it. But I would like to find a way of seeing if we can automate this. And I think with a bit of extra coding, we can actually do that. Next, I don't want to put too much into each session, so I'm going to avoid talking about the weekend gap or demonstrating it, but I will show you on the charts. On a weekend, price closes at some point, and then when it opens on the Friday night, and when it opens up on the Monday morning, it has had a huge gap, and more often than not, that gap gets filled. And I've actually got a strategy whereby I can mimic that, and we can actually have quite a nice profitable run. So this one is an easy thing to set, but it's also quite an easy one to trade manually. If you can be at your computer on Monday morning when the market's open and you've seen such a gap, then you're fairly safe in entering this case, sort of a buy somewhere around here and profit at least up, take part of your profit up at this point here. Sometimes you're lucky and it goes further. Another little gap here, which is filled, and so on. So that's quite a nice one to have, and it's certainly one that we can automate, and I'll show you that next week. Okay, this is the chart that I showed you in the Donna Forex forum, just to demonstrate how we can mimic a pullback strategy with RSI. This is the setup that I showed you, where we indicated the sell trades that were indicated, the buy trades in green that were indicated just as a manual trader. And when we automated that strategy and I ran it back, we can see it took exactly the same trades. It took a sell trade there at a bit of a here. It took this sell trade, but that went for a loss. We had a buy trade, this position, another buy trade at that position, and the buy trade at that position. So in this case, when we're working with quite simple indicator strategies, an MA crossing another MA, an RSI above a certain value, a MACD above a certain value or below, then we can automate that quite easily, and we can simulate that on the Autotrader, which means you can trade it on autopilot. And then, so that's a more positive way to finish than with my work in progress on the divergence indicator. So just to finish up, if you're new to Forex trading, Baby Pips is a good site to go where you can learn all the basics. They've got a nice school session whereby you take yourself through various levels. Analyze trading reports. Let me show you that quickly. If you want to buy the Autotrader, please use this link so that Donna Forex also benefits from the sales. If you want to contact me, please do so at info.diy Forex Skills. And no, I'll leave the strategy quant for next week rather than confuse the issue for today. And that is all then for today. So thank you for watching. If you want to watch next week's webinar, please don't forget to sign up. You can do that at the Forex website. Otherwise, I'll probably send you a reminder. Also, you should get a message with the recording link within a day or so. So until next week, and also I may be doing this at a different time slot because I'm finding if I do it in the morning, then I have a sleepless night thinking about it all. And so maybe I'll do it on Saturday night in Australia, which would be also more favorable for the Europeans. And in any case, anyone who does want to watch it, you'll be sent the recording when you register. So all the best in your trading. Have a great weekend. And until next week, this is Andrew Peters signing off. Thank you.